Hello, welcome to the 3D market commentary for today. Today is the 6th of December, it's a Monday, so hopefully you guys have a great trading week ahead of you. My name is Becky, my email address is down here, that's becky@tradictive.com, and there's also support@tradictive.com, so if you have any questions about anything we cover or anything trading related or trading related, by all means send us an email on those emails. I'll also show you another place in a second where you can go for questions. And I'm just going to cover as well the disclaimers. There they are on the top left hand corner. Please read them just to understand what you can expect from these kind of videos. Now the 3D market commentary is a video that we do every day, Monday to Friday, and it is basically expanding upon an email that we send out every day, Monday to Friday. And that email has information on world markets, 5 world markets, and for each of the markets we look at 3 separate elements. Hence 3D market commentary. So we'll go through that in just a sec. Now another place you can go for questions is this link here. It's tradewithufos.com/Becky. From this link you can get apps and platforms, you can book one-on-one coaching. If you scroll down a bit, there's also this space here where you can ask questions publicly, which is great because it then means we can answer the question publicly and everybody has access to see it and everybody can learn from it. So it might be that the question you have, somebody else has already asked, and therefore the answer is already there for you. Or it might be that the question that you have is obviously newer, and therefore you're doing somebody else that favour later down the line. So ideally, this is where you'd go to post questions. Okay, so let's bring up that email that we said gets sent out every day. And of course, it's relevant to market data. So we'll bring that up as well. Just going to squish this a little bit so we can really see what's happening. Okay, so I said that we look at 3 different elements per market, and this is what makes up our 3D approach. So the first thing we look at is the market climate. Essentially, where are the probabilities? Is that market likely to go up, likely to go down, or not really likely to go either direction? And therefore we get a better idea of, do we buy, or do we sell, or do we do nothing? Now we use technology to help us with everything here. So we're using an app called AutoClimate. This is a free app on most platforms you can get it on. And what that app does is tell us where the probabilities are. So it does a lot of that legwork for us. If we had a thick blue dot, that would tell us we have probability upwards. If we had a thick red dot, like we do in this example, that tells us probability is downwards. And if we had a thin dot of either colour, that tells us probability is neither direction. And therefore, again, we get a better idea of what we should be doing. So we're going to look at that per market, where the market direction is likely to go. Then what we'll look at is where we have unfilled orders, buyers and sellers, basically. Where are the buyers waiting? Where are the sellers waiting? If we know that, then we have a better idea of where price might go up from or where price might go down from. It allows us to be much more specific about the prices that we buy and sell at. So if we have these little red UFOs, those show us where the sellers are. Gives us the prices on the right hand side as well. If we have these little green UFOs, those show us where the buyers are. Again, give us the prices on the right hand side as well. So again, gives us an idea of where we should be buying and selling based on where price is likely to go up and down from, based on where the big stacks of buyers and sellers are. Then we want to understand market volatility. How quickly are these markets likely to move up or down? So we'll look at that per market, each of these elements per market. Starting with the S&P 500, which is the top 500 US stocks. We're looking at a daily chart for each of these markets. So of course, different things happen on different time frames. This is all relative or relevant to a daily chart. So with the S&P 500, top 500 US stocks, we have a confirmed downwards climate, thick red dot, probability downwards. We have gone past what is normal in terms of a move to the downside. We are twice as far as what would be normal. So bear in mind that we are overextended, but still probability down for the time being. We have sellers up here that have already, price came in and got pushed down. That's what sellers do. That's why we want to know where the sellers are. So those sellers are between 4740.5 to 4649. Then we have buyers down here between 4479.75 to 4436.25. That's what we have buyers. So if price were to come down and hit these buyers, we would expect them to be at least pushed up a little bit by them. So overall probability down for the time being with the S&P. We are overextended to the downside, but we do still have probability downwards. In terms of volatility, we would expect that the S&P 500 would go up or down in 1 year by 30.38%. So in a day, that's 86.95 points up or down. In a week, that's 191.4 points up or down. And in a month, 398.44 points up or down. Okay, so that's the S&P 500. Moving on to the next market, which is oil, crude oil. Now, just as I load that, just to highlight here, we do offer a bunch of courses and training. You can do courses in futures, stocks, forex, backtesting, trading plans, and psychology. So check those out, depending on obviously what makes more sense for you to learn about. Most of them will come with a 3-month complimentary access to the apps. So the AutoClimate app is a free app on most platforms. You get it on anyway. AutoUFOs is a paid for monthly subscription. Now you can subscribe directly to the AutoUFOs, and depending on which platform you use depends on what the cost for that is, but you can subscribe directly to them and just use the app. You don't need to take a course. Oftentimes though, it's actually cheaper to do a course and get access to the AutoUFOs for free for 3 months than it would be to just get the AutoUFOs. So check that out. Okay, so oil, we have a confirmed downwards climate, thick red dot, probability down. Now we have gone quite a way past, more than twice as much past what would be normal in terms of a move to the downside with oil. So again, overextended to the downside, but still probability down, just not as much as if we were early in this move. Now we have sellers up here at 79.23 to 77.98. We have buyers here at 60.77 to 58.73. And we're kind of in the middle, slightly closer to the buyers, but quite far away for them to really do anything today. So for the time being, the probability is coming from the climate pushing oil to the downside. Now we have volatility stats here that show us that we would expect oil to move up or down in 1 year of 64.55%. So in 1 day, that's 2.77 points. In 1 week, it's 6.1 points up or down. And in a month, 12.69 points up or down. So that's oil. Now with the next market, which is gold, let's just load this. Now just to say, again, we offer lots of coaching and support. We do a bunch of it for free. You can join us on YouTube and LinkedIn and Facebook and all kinds of places in order to follow us for free and join our coaching. There's also a closed coaching environment, which is a small monthly fee to have access to more of our time. However, like I said, we do a bunch of stuff for free as well. So obviously it depends what's best for you, but check that out. So we have another confirmed downwards climate, probability down, thick red dot, price pushing down. Now, we are again overextended in terms of a move to the downside, but still probability down. We have sellers up here at 1873.3 to 1844.2, and we have buyers here at 1652.8 to 1624.4. Again, we're in the middle, not really close to either stacks of buyers or sellers. It's very unlikely that they impact the markets today where they are. So again, the probability is coming to the downside and it's coming from the climate. In terms of market volatility, we would expect that gold would go up or down in 1 year of 17.92%. So in a day, that's 20.12 points up or down. In a week, 44.3 points up or down. And in a month, 92.21 points up or down. So that's gold. The next market is the US dollar. Now, as I load this with the US dollar, just to make the point that, of course, everything we're looking at and all of the statistics that we're quoting are exactly that. They're statistics and probabilities. It's not guarantees. Just because something is likely to happen doesn't mean it will happen. So of course we manage our risk just in case, and of course we want to make sure that we might layer things on top of this in order to increase our probabilities. So we do this just to get at least the baseline of where the probabilities would be before we then decide what to do with it. So US dollar, unconfirmed climate, that's a thin dot there. It means it doesn't really know what it's doing. It's not got probability either way. And that's not surprising. Price has sort of just bounced around. It's not really done anything. It's, again, not confirmed. Doesn't have a clear direction one way or the other. So keep away from it. There's no need to trade something that doesn't have clear probabilities one direction or the other. Now we have sellers up here at 96.94 to 96.66. So if price were to get up there, we would expect them to come down from that price. But for the time being, we're obviously not there. We have buyers here at 95.595 to 94.965. Price came into them earlier on last week and was pushed out because buyers push price up. That's why we want to know where they are, so we can have a good idea of where we should be buying. For the time being, not close to either stack of buy and sell orders, nor do we have any probability from the climate, so keep away. With the US dollar, we would expect it to move up or down in 1 year by 7%, which means 0.42 points up or down in a day, 0.93 points up or down in a week, and 1.94 points up or down in a month. So that's the US dollar. Now, the last market is backed Bitcoin. As I load back backed Bitcoin, take a look down here about our top platform. TOP stands for Tradictive Options Planner. But even if you're a stock trader or a futures trader or even a Forex trader, you can use that platform as well. I personally use it for stock trading. So check that out. That's our new platform. We're very excited about it. Now, with backed Bitcoin, confirmed downwards climate, thick red dot, probability down. We even gapped down. Again, a lot of selling pressure pushing Bitcoin down at the moment. We have sellers up here at 59,140 to 55,800. Those are new sellers. So again, lots of new sellers, lots of selling pressure coming into into Bitcoin. We have buyers all the way down here at 32,820 to 31,615. In fact, this gap down took out a bunch of buy orders, got rid of them. So again, probability to the downside here with Bitcoin. Now, overall, in terms of movement up or down, we would expect in 1 year that Bitcoin would go up or down by 101.97 points. So in a day, that's 3,044.26 points up or down. In a week, 6,701.63 points up or down. And in a month, 13,950.55 points up or down. That's what we would expect on Bitcoin. So that brings us to the end of each of our 5 markets. And what we've done for each of them is we looked at our market climate by looking at auto climate and seeing where we have probabilities. Were the probabilities up, down, or nowhere? And then we had a good idea of what we should be doing with these markets. Then what we've looked at are buy and sell UFOs. Where do we have buyers that could push price up? Where do we have sellers that could push price down? So that we can have a good idea of where we should be buying or selling. And then we looked at volatility, how quickly these markets are expected to move within these given periods of time. If you have any questions on that, you can email me or go to the link that I showed you at the start. Just to finish off, before we round off, we're going to check out our weekly economic calendar. Now we get this from fxstreet.com/economic-calendar. And we filter by high impact news, meaning we want to know what scheduled news reports are likely to have an impact on the markets and therefore increase volatility, which can also increase risk. So today being Monday, in the evening time, 10:30 in the evening time for Eastern time as well, so that's New York time, we have some news coming out on Australian markets. So if you trade Australian stocks or the Australian dollar, be aware of that. Now for the rest of the week, my colleague Boyan will be taking these sessions Tuesday and Wednesday, and I will be taking the session Thursday and Friday. So I'll see you guys towards the end of the week. If you have any questions, email me or go to tradewithufos.com/Becky, and you can ask the question in this general area, which means I can answer it there, and we can all learn from this place, and we can all answer each other's questions and all get information from him. Otherwise, like I said, you can email me. So I will see you guys soon. Have a great trading week. Have a great day today, and I'll catch